At Ines Group Berhad, we have built a strong foundation as a Malaysia-based edible bird's nest company. Our subsidiaries Mingfeng and Dynamic Transforms are among the top 10 Malaysian companies exporting raw, cleaned edible bird's nests to China, reinforcing our position as one of the leading market players in Malaysia's edible bird's nest industry. Looking ahead, we are focused on long-term growth and value creation. Our plans include manufacturing bottled bird's nest and other herbal beverages in-house, giving us greater control over quality, product development, and formulation flexibility.
In Malaysia, over the past 4 decades, Hock Soon Poultry Farm has evolved from a humble family business into a leading force in modern agriculture. Today, Hock Soon produces over 1.5 million eggs daily, with operations spanning more than 20 hectares. Every day, freshly laid eggs are transported via conveyor belts into our facility, where they pass through multiple inspection stations. Hock Soon's in-house brand, Q+, has been serving the nation for over a decade. The range includes omega, selenium, vitamin E-enriched eggs, and jumbo-sized eggs. Hock Soon Poultry Farm, nurturing quality from farm to table.
What would happen? Machines run. Operation stopped. Tables are dirty. Business halted. Store closed. Staff gone. What if you had Manforce Group? With Manforce Group, every step is handled. Every risk is managed. Every regulation met, from permits to paychecks, ensuring legal, fair, and quota compliant start. Partner with Manforce Group right from the start. Powered by Manforce Group Berhad.
Where creativity meets strategy, and where brands are built on innovation and insight. We provide a complete 360-degree marketing and sales solution, creating real-world exposure through business events, awards, and networking platforms. We then strengthen online presence through digital content, media exposure, and performance marketing. To reinforce awareness, we extend the message offline through billboards, banners, and digital out-of-home media.
KleverStock is a content-driven financial media and investor insights platform. We integrate live stream coverage, educational content, market data visualization, and AI-powered tools to support investor understanding and engagement. In the past year, we achieved significant momentum across our operations and market visibility. We delivered nearly 99% of all IPO and listing day live stream coverage, featuring executive interviews, ceremony broadcasting, and real-time market updates. We collaborated with major corporates including Foodie, Aquawalk, and many others. We also expanded partnerships with investor relations firms, trading platforms, and marketing agencies. KleverStock is now ISO certified, and our official media accreditation has been renewed, enhancing governance, access, and professional credibility. Our content performance continues to grow rapidly. We achieved over 10 million impressions across social platforms, 1.2 million unique visitors in 2025, and more than 630,000 live stream views driven by our IPO and market coverage. These results reinforce our growing influence and visibility across the financial community. We advanced our technology with Phase 2 of our AI engine, enabling smarter sentiment tracking, automated summaries, and improved market screening. Our priorities for 2025 include strengthening strategic partnerships, enhancing our IPO and corporate livestream capabilities, expanding content production, and accelerating AI-powered investor tools. We remain focused on innovation, consistency, and delivering market-relevant insights. KleverStock remains committed to growth, technology advancement, and delivering meaningful impact to our clients, partners, and audiences.
In a world powered by data, electricity is not optional, it is foundational. Every transaction, every connection, every system depends on it. Electricity sustains industries, enables digital ecosystems, and underpins modern life. Economic growth depends on stable infrastructure. Digital expansion depends on reliable power. EI power strengthens the systems that sustain both. We engineer certainty in environments where certainty is required. EI Power Berhad, powering tomorrow.
HSS Holdings Berhad, where we transform the finest bakery products into accessible delights for everyone. We combine premium quality with affordability, driving product innovation and leveraging our extensive distribution network to reach more markets, mini market, supermarket, and hypermarket. From HSS to LHMC and Kasaga, our commitment to quality, innovation, and customer satisfaction drives us forward. Join us in bringing incredible bakery products to the world. HSS, your trusted partner in bakery excellence.
Go!
Rest and go.
SRO. SRO, so you have a range clear launch.
And CDR.
Half of the KC processing a launch.
Good afternoon, investors. You are now on KleverStock with me, Madhvi, and I'll be serving you the midday roundup with the latest market updates from this morning up until now. Opening today's market wrap with a look at the domestic front, Malaysia's benchmark index experienced immediate profit-taking during early morning trade, erasing a portion of the previous session's 10-point rally. At 9:08 a.m., the FBM KLCI fell 4.65 points to 1,736.96. Broader market sentiment remains constrained by ongoing geopolitical impasses between the United States and Iran, alongside elevated global energy prices. Brent crude futures from October delivery dipped slightly below $88 a barrel as key shipping lanes through the Strait of Hormuz remained restricted. According to PAC Securities, the FBM KLCI continues to test the upper boundary of a downward sloping channel that has kept market momentum since early 2026. Technical analysts noted that for a sustained bullish trend to take hold, the benchmark index must clear the immediate resistance zone between 1,760 and 1,770 points. Immediate market support is pegged at 1,720 with a secondary support floor near 1,700. On the macroeconomic front, An in-line U.S. Consumer Price Index report overnight boosted market expectations that the Federal Reserve will hold interest rates steady as its September meeting, with rate odds rising to approximately 60%. Early selling among index heavyweights was led by pressed metal aluminium, which dropped 13 cents to 7.86 ringgit, alongside IOI Corporation down 8 cents to 4.47 ringgit, and SD Guthrie sliding 6 cents to 6.74 ringgit. Banking stocks also pulled back, with Hong Leong Bank shedding 28 cents to 22.42 ringgit, Maybank dropping 2 cents to 10.58 ringgit, AMMB Holdings declining 4 cents to 7.33 ringgit, and Public Bank easing 2 cents and 5.17 ringgit. On the active counters list, technology and semiconductor-linked shares saw buying interest led by Key ASIC gaining 1 cent to 4.5 cent, Opstar advancing 3 cent to 71.5 cent, and Amulis rising 3 cent to 45 cent. Now moving on to local currency and foreign exchange. The Malaysian ringgit opened higher against the major global currencies this morning, but traded slightly softer against the US dollar following the release of July US Consumer Price Index data. At 8 a.m., the local currency edged down to 4.0850 to 4.0950 against a greenback from Wednesday's close of 4.0835 to 4.0875. Bank Muamalat Malaysia Chief Economist Dr. Muhammad Afzal Nizam Abdul Rashid noted that US CPI inflation moderated slightly to 3.4% in July from 3.5% in June, which matched consensus expectations. Following the inflation release, 10-year US Treasury yields fell below 4.70%, while 2-year note yields dipped to 4.20%, indicating that the Federal Reserve remains in no rush to hike rates further. However, ongoing supply chain concerns around the Strait of Hormuz continue to sustain potential inflation risk in energy markets. Bank Muamalat Malaysia projects the ringgit to fluctuate between 4 ringgit 7 cent and 4 ringgit 9 cent against the US dollar throughout today's session. In cross-currency markets, the local note gained across major pairings. The ringgit strengthened against the Japanese yen to 2.5637 from Wednesday's 2.5655 close, while rising against the euro to 4.7092 from 4.7107, and improving vis-a-vis the British pound to 5.5135 from 5.5180. And among regional currencies, the ringgit picked up against the Thai baht to 12.3418, but traded slightly lower against the Singapore dollar at 3.1912. The local unit remained flat against the US Indonesian rupiah at 228.5 and the Philippine peso at 6.67. Now for some economic news. Renewable energy construction activity across Malaysia is entering a rapid growth phase, with battery energy storage systems emerging as a critical component of national grid infrastructure. As Malaysia targets 70% renewable energy generation capacity by 2050, energy storage development is becoming essential to balance intermittent solar power, support grid stability, and provide continuous power for the surge in data center developments. A recent research note from Hong Leong Investment Bank highlighted energy storage as a billion ringgit growth opportunity driven by government initiatives such as large-scale solar 6, which includes 1,250 megawatts of BESS capacity. Data centers, which requires uninterrupted power supplies, are increasingly turning to battery storage as a cleaner, fast-responding alternative to traditional diesel generators. Capitalizing on this momentum, digital services company PU Sibahat is entering the energy storage sector through the proposed 6.6 75 million ringgit acquisition of HBES as Sindrian Berhad. The transaction will be funded via a 10% private placement of up to 304.8 million new PLC shares expected to raise gross proceeds of 10.49 million ringgit. HBESS has partnered with China-based storage manufacturer Lithium Tech HK to establish a local assembly line in Malaysia with a targeted annual capacity of up to 2.0 gigawatt hours. The acquisition includes the profit guarantee of 3.5 million ringgit to integrate an aggregated audited net profit from the financial years 2026 through 2028, positioning PUC to capture expanding commercial, industrial, and utility scale energy storage demand across Southeast Asia. We'll now take a short break, but don't go away. We'll return shortly with corporate news and developments. Welcome back to the Midday Roundup. Let's continue with some corporate updates. DPS Resources Bharat has announced major strategic steps in the digital infrastructure pipeline. Its wholly owned subsidiary, Shanta Boots and Rian Bharat, signed a memorandum of understanding with BBSB Holdings, a subsidiary of Hong Kong-listed BBSB International Limited, for the proposed phased lease development of the data center capacity of up to 89 megawatts with potential long-term expansion up to 400 megawatts. Under the framework, BBSB will act as a strategic partner to support the development, infrastructure, provisioning, and off-taker coordination of the Shanta Foods proposed facility in Malacca. The proposed 89 megawatt initial allocation is structured across 4 delivery phases. Phase 1 targets 20 megawatts in 2027, Phase 2 aims for 20 megawatts in 2028, and Phase 3 plans for 20 megawatts in 2029. Phase 4 will complete the initial build-out with 29 megawatts in 2030. Further scaling up to an aggregated 400 megawatts remains subject to technical feasibility, regulatory approvals, and definitive agreements. To support the project, Shanta Wood has completed key utility and regulatory groundwork. Tenaga Nasional Bharat and SDT Engineering confirmed the 500 megawatts and 89.1 megawatts for the respective sites. Sharikat IM Malacca Bharat issued a no objection letter on August 7, 2026, validating adequate water supply, further confirmed by GNL Engineering Consultancy. The Chief Minister of Malacca issued a letter of support on July 30, 2026, with formal submission currently under evaluation by the data center. Up next, we have commodity update. Sorry for the apologies, and we will be back shortly. Apologies for the technical issues. Let's continue with some corporate updates. Construction and Property Development Group TSR Capital Berhad has strengthened its current order book after its wholly owned subsidiary TSR Bina Sdn Berhad secured a 16.9 million contract from MIE Industrial Sdn Berhad for the earthworks and preliminary site preparation in Seremban Negeri Sembilan. According to a regulatory filing with Bursa Malaysia, the awarded contract tasked TSR Bina with comprehensive initial construction works on the site encompassing extensive land clearing, excavation and foundational earth-moving operations required prior to the main development. The group outlined that the execution will proceed on an accelerated timeline. The contract is for a duration of 4 months and is scheduled to be completed by fourth quarter of financial year 2026. TSR Capital stated in its exchange filing. Highlighting the project's financial book, TSR Capital noted that, barring any unforeseen operational delays or market complications, the newly secured deal is expected to provide financial momentum, contributing positively to the group's net assets and overall earnings profile for the financial year end June 30, 2027. Up next, we have an IPO update. Homegrown coffee chain Zeus Coffee is exploring a potential initial public offering of its domestic operations in a deal that could raise at least 1 billion ringgit, according to sources familiar with the matter. The brand's parent company, Zeus Presso Sdn Berhad, is currently working alongside financial advisors to structure the listing, which could value the business at approximately 4 billion ringgit. The proposed offering could take place on Bursa Malaysia as early as mid-2027. However, deliberations remains ongoing and key parameters, including the final valuation, offer size, and execution timeline, are subjected to revision. Zeus Presso did not immediately respond to requests for the comment regarding the reported plans. First established in 2019, Zeus Coffee experienced rapid growth and surpassed Starbucks Corp in 2024 to become Malaysia's largest coffee chain. By store count, the brand has expanded its footprint further, reaching 1,000 outlets by October, while building an international footprint with locations across regional markets including Thailand, the Philippines and Singapore. And moving on to today's major corporate developments and the deals across Malaysia. Gamoda Berhad has secured 2 EPC contracts worth combined 569 Australian dollars or about 1.64 billion ringgit for the Ganimura and Majors Greek solar and battery hybrid projects in Australia. MN Holdings Berhad has secured a 71 million ringgit contract from Tenaga Nasional Berhad to build a 132 or 33 kilowatt transmission intake in Cameron Highlands, Pahang. TSR Capital Berhad has secured a 16.9 million ringgit contract from MIE Industrial Sdn Berhad to undertake site clearing and earthworks for an industrial development in Seremban Negeri Sembilan. ETA Group Berhad has secured 2 construction contracts worth a combined 13.2 million ringgit from 2 wholly owned units of Ekem Holdings Berhad to build industrial factories and warehouses in Rawang, Selangor. Chuan Huat Resources Berhad plans to raise up to 5.5 million ringgit via a private placement to fund the expansion of its wire mesh production capacity in Nilai, Negeri Sembilan. Tomei Consolidated Berhad is partnering Ta Yong Group for its pawnbroking venture through a joint venture under JP United Sdn Berhad. Guoco Land Malaysia Berhad will be delisted from Bursa Malaysia's official list effective 9 a.m. on August 18, 2026, following its privatization via a selective capital reduction and repayment exercise. And that's a wrap for Midday Roundup with me, Madhavi, on KleverStock. Thank you for choosing us, investors. Stay tuned for upcoming live stream programs.